Start streaming, start recording. Okay, we are live. Happy Wednesday, everybody. Welcome to this episode of Crypto with Chris. We got a fun episode today. My friend Kwakadaka from Real Vision is going to come on, and we're going to talk about all the stupid degen stuff that we've done and the lessons we've learned and all the things we wish we would have known since being in the space since 2017. And yeah, it should be a lot of fun. Hopefully the audio and all the technical difficulties that I had the last time I had a guest on have been resolved, but hopefully people in the chat will let me know. And then also before we get into that, I just wanted to remind everybody to also follow my Twitch channel so that you can get alerts and also so that you can comment in the chat. You have to follow me in order to be able to comment. So do that, please, because I'd love to have, especially some of the folks from Real Vision that I know are watching this, harass us in the chat, because I think that would be a lot of fun. So yeah, follow my Telegram channel too. That's got all the alerts for everything, and all the links for all of that stuff is in my Twitch profile and in the comment or in the description of the video. So anyway, with that, let's get started. So Kwakadaka, good to have you on. I think this is going to be a lot of fun today.
Yeah, I think we're going to have a great time reliving all these past failures.
No, I know. So, all right. So, I kind of wanted to just sort of go back to the beginning, and we can kind of recount our stories a little bit, and through sort of the lens of technical analysis and charts, and kind of use maybe the Bitcoin chart as like a timeline, for how we all went through this process. So I'll kind of start. I've got a couple things I wanted to dig into here. So basically, I got in a little bit late. So what we're looking at here is the Bitcoin chart going back kind of to the previous cycle. And I got in around the beginning of October, like October, early October, October 1st, somewhere in this range here on the chart. And if you can see, if you notice, by that point, everything was super parabolic. And so I didn't have a ton of money, but I threw like a good chunk in at the time. For me, it was a lot of money back then, especially since it was just like this crazy thing, crypto. Nobody knew what the hell it was, and I threw in about $10,000, just thinking, okay, I'm just going to roll with this. Let's just go for it. And within a month, it had doubled. So from like October 1st to November 1st, it had doubled. And I'm like, hey, this is cool. Like, right? I'm digging this so far. And then the second month again. So from October 1st or from November 1st to December 1st, it doubled again. And then I'm like, hell yeah, like I'm like this baller investor. I know what I'm doing. So I'd gone from 10 to 20, and then from 20 to 40. And then like it was getting up to like, double again a third time up to like 80. And it got up to about whatever, 60,000 bucks or so. And I thought, wow, in 2 months, I've turned 10 grand into like 60 some thousand bucks. And I was doing all kinds of just stupid stuff, which we'll get into in a minute. But then, of course, everything peaked, and the the story was over from there, and I just didn't know what was going on. But yeah, I just kind of wanted to jump out of the gate with that. But sort of give me your initial foray. How did you get in? When? And what did that look like for you?
Yeah, I don't remember the dollar amounts, but I got in May 2017. I'm looking at this chart trying to remember, was it like right before that 30% dump there that I can see
Right.
around
This one
about
here.
the no, a bit further on, that's 2016.
Oh, yeah.
The one,
May,
yep, go a bit further.
sure.
Yeah, bit
March,
more than
May.
that one, that one.
Okay.
Given my luck in crypto, I probably got in on that green candle you're looking at right there, and then
Right.
promptly watched it go down 30%. Yeah, I had no idea what I was doing. It was basically brand new to it. I was throwing money in. I did, what is often the typical route, which was, the entry point was Bitcoin. And then I promptly had FOMO, where I thought, well, this thing's already so big, I need to go for something that's a smaller market cap, because those things will pump more. So I put some money in ETH, I put some money in XRP. XRP was like flat for the majority of 2017, while things like Bitcoin were going vertical. So I just felt like an idiot. I'm like, I got this thesis around it. It's like, there's banking and remittances and international payments. It makes sense to me. Why is it not going up? Meanwhile, Bitcoin's going up. I had some Bitcoin, I had some ETH, so that was okay. The XRP, though, I think it was in December, like it 10x'd. And I was like, this is it. I've worked it out. I am a god. I sold 20. I picked the top. I sold 20% of the top, and then like round trip the other 80% back to like a 2x. which still felt it felt terrible
Right.
losing that 8x, but it still also felt like, oh, I finally made some money. I finally hit a winner. Um, but then 2018 hit, and I think what no one really was prepared for was like how long and how low it would go. Like, I mean, we were down like 85% on Bitcoin. The alts were all down like 95% plus. Like, and I held a lot of mine. I was like, I'm not going to try and time it. I don't want to pay capital gains tax, and just watched it bleed for a year and a half, which was
Right.
a nightmare. And I still remember you can see on that chart like the lowering volatility at the 6K line through all of 2018,
Right. Right.
and thinking like that November dump another 50%. Like a lot of people were like, oh, we're going to start getting volatility up from here again. We've hit the bottom. And so I held, and that last 50% dump from 6K to 3K that was pretty brutal. That was
Indeed.
definitely one where it's like, oh man, when like what year am I going to be making it in crypto? Because when you're in crypto, you think like I'm gonna make it within the next 12 months.
Right.
And when that 6K to 3K jump happened, I was like, okay, what year is it going to be when I'm going to GMI? That was that was painful. Yeah, lots of lessons there though.
For sure, for sure. I definitely want to get into this bottoming area, but I think let's back up a
Mm,
little bit before we get there because there was a few things I
yeah.
wanted to touch on back in this. So once I had sort of doubled twice, maybe when I got up to, 40,000 bucks or so, I'm like, of course, there was so much going on. Around here was when ICOs really started to kick on, and I was a part of like a bunch of different Telegram groups, and everybody was ICOs this, ICOs that. You got to do it. I even got into there was a group that was just like all they did was ICOs, and they would get you on like these buy lists or allow lists or whatever so that you could get in on these ICOs and stuff like that. And so I started taking a bunch of my profit and just throwing it at literally anything and everything. Um, and of course, most of those ICOs turned out to be scams because they ended up just not being total rugs. Like basically, you would just buy into
Yeah.
these ICOs, and the projects would never even launch half the time. Um, and I was like getting really geeky because I had like all this IT knowledge. And so I was running trading bots. I was running like master nodes on all these like nascent layer one blockchains that had come from nowhere. I was like running like multiple hosted, Linux servers in like data centers like 3 months into this, not really I mean, I was cool. It was fun. It was just like all the stuff was going on and everything was coming at me so fast, and I just was like having fun with all of it. And but then I started losing a bunch of money from these ICOs, of course, because I put probably half of the money I had in ICOs, thinking, oh, they're going to double, and then they're going to double again, and then they're going to 10x, and I'm going to be rich. And of course, like as everything is, December is rolling into January, and everything's really starting to tank, and but alts were still crushing it at that point because like ETH didn't top until like late into January. And so that's when ICOs were still
Yeah.
popping off. And so I thought I was just, I thought I had the formula down. I'm just like, well, I'll buy an ICO, I'll 10x it, I'll sell that, I'll buy another one, I'll 10x that. And, in a month I'll have like $10 million, which just sounds so absurd right now. Um, but yeah, and so one thing I want to talk about though is what I started to do. So coming into 2018 now, everything is clearly over at this point. And so I'm like, okay, well, what's happening now? Like, how long is this going to last? What's really going on? I still had no kind of concept. The idea of like cycles, I still was way far away from that. I had no clue. I was just like you said, we were just like, when is this going to end? How low is it going to go? When is this going to end? I did notice though, even if you look at this big wick down here, the 6,000 number had started to kind of come into play, and we were noticing that it was really holding strong support at this 6,000
Yeah.
level. And so in my infinite wisdom, I was like, okay, a good friend of mine, we got together, we put our heads together, and we're like, okay, we think this is going to be a thing. We think crypto is going to be like a thing going forward, but clearly you need to you can't just throw money at everything. So we were like, okay, well, what sectors does blockchain really lend itself well to? Like, what can we sort of establish conviction in and figure out what's going to be the best things going forward? Like where blockchain is going to be used the most. And so we thought things like supply chain management, or like peer-to-peer digital currencies or like privacy tokens, or, we were just trying to look at all the things that were out there at the time and figure it
Hmm.
out,
Hmm.
And even at that point, like I feel like smart contracts were, it's like, yeah, Ethereum existed and there was the potential for all these smart contracts, but like really smart contracts weren't even coming into widespread use even at that point, And so, um, kind of long story short, my friend and I were like, I think supply chains really seems like a legit, solid, viable use case for blockchains because you got all these, different entities and you need to track all these movements and you need to track, the source of things and the movements of things. And, you can track things like if something got below a certain temperature while en route, or just whatever, all this random supply chain kind of related stuff. And we stumbled on this project. I'm not going to name it by name. I thought maybe I could or I would, but I don't know if I will. Anyway, there was a project around at the time. It's not VeChain or any of these other sort of semi uh, supply chain related projects that are out now. It was an early one, and we were like, "This is it!" Like the team seemed on the ball. Like they had cool things going. They were working like IoT into the mix, and they had all these sensors and stuff that would just like communicate readings to the blockchain. And we were like, "Oh my god, this is the future. This is everything." So I literally sunk like most of my money into this project, and like to the extent where like we were running a node on their network. We were even doing like biz dev. We were like interfacing with the managers or the leadership groups and all that stuff, and like thinking this is going to be the thing. um and of course it wasn't. Of course, primarily because it was way too early. Like no supply chain is like hundreds of sort of disparate entities. You've got shipping companies, you've got the endpoints, the shippers, the receivers, all these different logistical organizations, and all of them would have had to like been on board with this one sort of technology and this one blockchain for this to work. And of course, there's no way that
Hmm.
in 2018 you're going to get all of this to come together, to materialize, but we didn't think that at the time. And so kind of what I'm getting at with all of this is we got way too hung up in a really strong narrative really early on. We were like thinking we were, totally just like, mega IQing this. But really we were just like so stupid about it. And we got so caught up in it and put way too much money into it. And of course it crashed and burned. And that was a really hard lesson because I had so much conviction in this project and I just knew that it was going to be the thing. And huge mistake, huge lesson learned there. Because had I just took all that money and just left it in Bitcoin, I would have been 1,000 times better off. I pretty much, watched it go down 95% like every other alt in the space. And I was just really confused by that and really just kind of disheartened by that. Um, and eventually I did sort of get my initial investment outlay back kind of later on, some years later, mostly, probably
Hmm.
three-quarters of it anyway. But had I just left it in Bitcoin, I would have been 1,000 times better off. It would have been like, like,
Right. You got it back, but you got it back in dollar terms, not in Bitcoin terms, right?
yeah, and years later, like 3 years later, when it
Yeah.
when it was worth, nothing. Yeah. And so that was kind of my biggest like, oh, right. Don't get married to any one project. Don't like think that this is going to be the thing and put all your money into it and just don't do don't do that. Was there you had like you said you had kind of a similar experience with XRP. At what point were you just like, you know what, I got to cut bait or I got to no, this is wrong. Like tell me about that.
Yeah, I actually, so my experience coming out of 2018 into 2019 is almost like the opposite of yours, right? So, in 2017, I'd started to play around with like some alts. But over the course of 2018, watching them not just go down like 95% against the dollar, but also basically, like might as well be going down like 95% against Bitcoin as well. So I came out of 2018, like my PTSD from that experience was all alts, ICOs are scams. Like, the one thing that might have a product market fit is Bitcoin. Everything goes down against Bitcoin over time. Even Ethereum like dumped pretty hard against Bitcoin. And so, I really came out of 2018 into 2019 being very Bitcoin heavy. It's like, all right, none of these other things are going to make it over time against Bitcoin. So I'm just going to be 90% plus in Bitcoin. Bitcoin still went down like 85% between the peak of 2017 and the bottom of like the end of 2018. But at least it was starting to come back in 2019. And so my PTSD and something really held me back in 2020 with DeFi and then 2021 with things like NFTs was I still had this belief that like everything else was basically a scam. Like you're right, like smart contracts through 2018 and a lot of 2019, like they weren't really doing anything. Like ETH was wallowing.
Right.
All these people were like, oh, we're going to build all this stuff, and nothing really ever sort of came out of it. There was no product market fit. Even like today with some of these perp dexes, like you'd look at these projects and be like, there's a couple of hundred people using this thing. The UX is almost impossible. Like none of these things are gonna work out. So in a way, I married my bag, which is Bitcoin. Which if you're going to be in crypto, you might as well marry Bitcoin or ETH.
Sure.
Like chances are you're going to minimize the damage over the years to your net wealth if you marry one of those. But coming out of those experiences, it's really important to understand what your PTSD is, right? So like there's a lot of people that are going to have joined in 2021 and have kind of held through 2022. And I really wonder what their PTSD will be. I think a lot of them, right, it might be like PFP NFTs. And so they might come out of 2022 just thinking everything to do with NFTs is a scam, where there will likely be like value built in NFTs, and maybe there'll be a new like sort of product that NFTs will create that like isn't PFPs, but maybe some of these 2021 fresh women
Sure.
will miss, right? So it's really important to understand like where your PTSD lies after you've been through a massive bet. It's also very important
Absolutely.
not to marry your bags, and that includes marrying Bitcoin and ETH,
A
right? And
hundred
the only
percent.
reason that you might hold on to them, which is what I did, is if you're in a high tax jurisdiction and you're like, look, even if I sell these things, I'm going to lose 40%. So maybe I do want to hold. But if you were someone that lived in like a jurisdiction where there's low or no tax, like there's really no reason to hold through the end of a bull run. Like you just cut your losses and come back a year later.
Right. Right. Exactly. Exactly. I'm glad you said that too, because yeah, even Bitcoin and ETH, don't be married to them. Like
Yeah.
be nimble, be ready to sell. Um, yes, and actually, I'll touch on that in a little bit. I've got a funny story about not not selling when I should have, and being married to certain stupid things. But I wanted to kind of circle back real quick, to around, I think it was the beginning of January, or maybe January, or what did I made a note? January 14th. So January 14th was interesting to me because we had already bottomed out here. Everything was looking very ugly, and I was in a place where like at this point I was down 95%. I had lost a lot of my money, but I still had like conviction in the space generally. And and the potential of blockchain, but I just really was kind of grasping at straws in terms of trying to understand the bigger picture of it. On January 14th was a special day because that was the first day that Bob Lucas actually put out his first video on YouTube. And I saw it right
Mm.
around that time. And he came on and he was basically started blowing my mind with the concept of like, tracking Bitcoin in a cyclical fashion and really just tracking the cycles and the way Bitcoin goes in different cycles on different time frames. But it was from that video that he had such conviction, even on January 14th, that Bitcoin was going to go up another massive bull run over the next 3 years. And he even was doing an experiment. So basically, his first video, he's like, okay, I'm so convicted in this, I'm going to buy 25 Bitcoin, and I'm just going to plop it in a wallet, and we're just going to follow it through this whole cycle, and we're going to see what happens. But I'm willing to tell you right now, I think it's going to do a 20x or whatever. And I was like,
Mm-hmm.
wow, okay, okay. And so that was kind of my first foray into, like, I had learned a lot about technical analysis over 2018. I had done a bunch of courses and just self-study and follow people like Cred. I did his little investing course on YouTube, which is fantastic, by the way,
Yep.
and
Yep.
stuff like that. So I kind of learned the underlying fundamentals of technical analysis, but I had yet to sort of grasp how to like apply it and sort of apply it in such a way that I could make it more actionable for myself, and really kind
Hmm.
of benefit from it. Like I was trying to trade and just, of course, losing my ass most of the time because I didn't really know what I was doing. I was just sort of, look, oh, it looks like it's going to go up, It's like, but I have no idea why, But yeah, so Bob Lucas started establishing this sort of foundation for me of like how to sort of contextualize all of this and sort of make actionable, I draw actionable ideas from it and things like that. And so that was sort of the first thing that really helped me kind of get going. But again, so I was like, okay, I'm going to start taking more money, and I kind of had to start over basically. I That 10 grand that I had, even though it went up to 60 or whatever, it was back down to whatever, less than 10. So I'm like, well, this isn't going to do me any good. So but I sort of like was recommitted after seeing that video. I was like, okay, I like this. I bought into this sort of philosophy and this notion that of these cycles, and even though again it was literally January 2019, none of this had happened on this chart at all yet, but here was Bob going, you know what, this is going to happen, and sure enough it did. I mean, looking back, but like, so where was I going? Oh, so I went back to my approach of, okay, well, I'm going to reinvest. I'm going to, start dumping a bunch of all my extra money into crypto that I had. Like I had this job, my girlfriend had a job, and we basically took all of her 100% of her income and invested it, like a whole year's salary basically, at the time. And but I still made the mistake of getting married to the idea of, okay, well, I need to pick my projects. I need to pick my altcoins that are going to do well this next cycle. Like, what am I going to go? And of
Hmm.
course, I'm
Hmm.
analyzing projects that were around in the previous cycle. Like as we
Yep.
know now, that's not the greatest thing to do. And so we're like, which of these alts that are still around that are down 95% are going to be the thing that's going to do a 100x for me, and I did all these thought experiments and all this analysis, and and I stumbled on a handful at the time, in sort of early, right around in this time frame, sort of early to mid 2019. And so at the time, those were a project called Quant, a project called Link, which we all know
Hmm.
about Link, a VeChain,
Yep.
again, because I was still stuck on the supply chain trip for a stupid reason, and then ETH and Bitcoin. And so I was like, well, I'm just going to put all my money into these and build up a big sort of allocation and just ride that. And so I did that pretty much for all of 2019 and 2020. And through that time, about halfway through this time, maybe around the COVID crash here, I realized VeChain was ridiculous, and that was stupid. Even though it did end up it went up okay, but whatever. I was still stuck on Link and Quant though, and then ETH and Bitcoin. So I dumped my VeChain allocation, um, and then hold on, let's see what this. I got a comment here. Can we touch on the cost of buying and selling again? So not being married to something in terms of Bitcoins. If the entire industry is trending to the top right, particularly Bitcoin and ETH, then why would you get out of those two in particular? Um, let's see. Oh, you can't see the comments, can you?
No, no, you'll have to read them out. I can't
Okay,
see
let
them.
me let me read this again. So it says, can we touch on the cost of selling and buying in again? Like, so not being married to something, in terms of Bitcoins. Like, if the entire industry is trending to the top right, particularly ETH and Bitcoin, then why would you get out of those two in particular? Well, I
Yep.
can start by saying I didn't get out of Bitcoin and ETH at all in that time. But I will
Yep.
touch on, actually, good question. I'm going to answer that in a little bit, when I get on to lessons with moving averages and some top triggers and some indicators that I've seen that would, I think, better clearly answer that. So I'm going to circle back around to that.
Yeah.
Um,
Yeah. My only comment on that would be, I also rode my bags the whole way down in 2018, 19, and was for specifically that reason. It's like over time, I'm one of the things that I'm not good at is timing. So if you look at my like short term trading and my alt trading, it's like 85% of those are definitely losses. There's a couple of wins in there, but basically, like I make all of my money on the long term holds, which have historically been Bitcoin and ETH. very, very few people are successful at trading, especially short-term trading. And I think probably the smartest thing for all of us here would be just like, all right, buy 50% Bitcoin, 50% ETH, and then not look at it for 5 years and go live your life and do other things. But we're all on this channel because we just can't do that. And
Right.
so I still think you should have probably something like, 30% Bitcoin, 30% ETH, 40% alts, or 30% Bitcoin, 40% ETH, 30% alts, so that you can have like a smaller portion that you can try and convince yourself that somehow you're going to be able to outperform those two,
Right.
but still, not completely fuck it up and make it. But yeah, I think you're going to come to the charts in a minute. The only time that you'd get out of them, and I did get out of half of my positions in 2022, more towards the first half of 2022, was just because I understood at that point just how far down and how long it goes down when there is a bear market in crypto. They last at least a year. They go down like 80%. Alts go to zero effectively. And so I do think it's possible, and it does depend on your taxes, and I wouldn't ever sell all of them because you don't want to sort of rely on timing. But I think there is, like, you don't want to have the pain of writing something up and then just writing it down 80% in 12 months. So getting out when you see some of the indicators, Blasto, that you're going to show, like, I do, like, that is something that I will be really trying to do at the end of this coming bull run. Is I will probably do what we've heard some other people publicly say on Twitter have done in the past, which people laugh at when it doesn't work out, but there is actually a bunch of sense to it. I remember Ralph Howell was talking about how he bought a bunch of like ETH calls towards the end of 2021. And I remember someone in 2017 was talking about how they bought a bunch of BTC call options, like right at the peak.
Right.
And people like sort of mocked both of them. But in both cases, well, at least in the case of the guy in 2017, what he'd basically done was he'd sold his spot position to realize the gains, but then had bought options to say, look, if it continues to go up and I've gotten out too soon, I'll still benefit from like the gains on these options, but I've secured my bags basically. He was like, effectively, he must have sort of like taken 80% out, maybe spent 10% on some call options, and would have been in a great place to sort of like continue to get profits if the market continued. But basically, he'd like locked in his profits. So I think, when we have these big rollovers, we can sort of look at the indicators for those now. Like, I do think, tax dependent, getting out at least a portion of your bags is sensible, because you don't want to do what Blasto and I have now experienced, is like 80% declines. There's nothing that makes you feel like you're going to make it and then makes you question 12 months later, wait, am I ever going to make it? When you watch your portfolio go down 80, 90%, like, you want to have that money ready when the next bull market starts, to just have so much more capital to fire with.
Right. Right. So yeah, I guess I'll elaborate on that a little bit. I guess we'll answer this question now anyway, in terms of the indicators. So, and then we can kind of go back to what I was touching on. So, a couple of big takeaways I got from this last sort of peaking, topping, double top situation that we had was, um, the 10 and the 20-week moving averages really kind of stand out to me a lot, because, even just looking at this, like this whole run up here, Bitcoin was really outside even the 10-week moving average up until it got to this first peak, and then it started to roll over. And once it closed, this first weekly candle closed below the 20-week moving average, it was kind of just all downhill from there. And then again, the second time around too, you're looking at it, first it closes over the 10, then it closes over the 20, and that was it. It really just kind of never looked back. I mean, yeah, it sort of did a fake out move here. But I think even just looking back, honestly, if I would have just sold both times that it crossed down below this 20-week moving average on the weekly and closed below it on the weekly, I would have been like 1,000 times better off than I was. I mean, just looking back on it. And then a couple other things. Of course, there's the Pi cycle top, which one of the so I'm so kind of pissed at it here. Let me get rid of some of this other clutter for a second.
Man, if I had the pi indicator, if that this is one of those ones where it's like you find this indicator and you're like, fuck me, my entire life would have been different if I knew about this this one thing.
No, I know,
Uh,
right. Yeah, okay. So, well, yeah, because exactly. It called it to almost to the day, both peaks. Here's the dotted line, and also here's the dotted line. So I learned about the pi cycle top indicator. I learned of its existence probably right about, say, here, like
mm.
a month and a half later, after it had already sort of just fully puked. I was like, wait, what? The pi cycle, it calls these tops like perfectly. Like what is even happening here? And then of course by that point, it was too out of whack and it never came back around. So um yeah. So like this was a huge thing. Now, of course, we don't know what's going to happen going forward. Yes, it's flagged on every peak, with this accepting this one here, going back in Bitcoin's entire history. Surely it's going to peak again on another top at some point going forward. Will it be the top? I don't know, but this is certainly something I'm going to be looking for. But it's not
Just zoom
everything.
in on that so that
Yeah, well, yeah,
just stay on that one for a second and zoom
sure.
in on it so people can see what's actually happening with those two colored lines and that they're crossing over each other is what's happening with
So
this
yeah,
indicator.
and I might even look at it on the daily to see if that's even
Yeah,
helpful.
yeah.
If it's kind of wonky here. I wish it would
The
when you switch time frames.
2017 is a great one to look at for it as well. Yeah.
Yeah, I wish when
There
you
we go.
switch
Yeah.
time frames, it would like stay right where you're at. But okay, so this
Yeah.
is the first peak in 2021. Yeah, so as soon as these lines cross over, boom, it triggers a flag, and you can see the dotted line shooting up, and it's like it's signaling the peak. And I mean, if you look at it, literally, it was technically off by one day. Like,
Yeah.
I mean, come on. And then yeah, 2017 too. Let's go back and look at that. I mean, it's like uncanny, really. Um,
I mean, yeah. I look.
what?
I uh, one one of my biggest like things I need to work on is I can be too slow, either to get into a position or to get out of a position. This indicator, if and when it crosses again, I'm basically out. Like I I am going to get the majority of that, like that day, the majority of my portfolio will be sold. I might do things like buy call options, for example, in case it continues to go up. I will always keep like a portion of my bags, maybe 25% in case things continue. But, you know, I need to use indicators to prevent me from hanging on too long. I think that's probably a case for a lot of people. Like you marry your
Yeah.
bag, you're like, what if it keeps going up? What if this is just one of those 30% dips and then we keep going? Uh, no, I think this one is so good that I'm just going to blindly follow it when it next crosses. And that's it. Like I'm out of majority positions and it'll probably work really well for me. If I look back 6 months later, I'll probably think, yeah, that was actually perfect.
I think so too. Yeah, I'll piggyback on that a second. I want to. So there's a question in the chat. So what the pi cycle top indicator is, and first let me disclaimer: I don't fully understand how it works or the sort of it's like voodoo to me. So basically, the top line, the slower moving line, is a 350 bar moving average squared, and the yellow line is the 111 bar moving average. Um, I think it was James King Cobes. He said that if you like divide this by this, you get pi roughly, like um, 3.14,
Yeah, I think
blah blah
that's
blah.
why it's called pi. Yeah,
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 yeah.
yeah.
So that's where the pi cycle top comes from in terms of the name and the mathematics behind it. But like that's sort of the underlying, I guess, ideology. But like how somebody came up with this and how somebody decided to and how the 350 squared versus just 350, one of them is squared, the other one isn't, and how somehow that accurately predicts a top like this to the degree that it does, to the uncanny degree that it does. I can't explain it at all. I really wish I knew somebody who could, or I could find an explanation somewhere, but I don't know. I really don't know. It's just kind of crazy to me.
Look,
But
it's got pi in it. It's using more maths than I do in my
right.
decisions, so it's good. I'm
Right.
trusting it.
I did want to touch on a couple other things though. Let me put these back on. Let me
Yeah.
kick this back on. Let me kick this back on. Oops, not that one. Um, okay, so a few other indicators. So yes, I'm going to be relying on the pi cycle top, but um, well, let me turn that back on for a sec too. But I'm going to want some other confluence. I'm going to want, not
Yep.
because like I don't believe it, but just for peace of mind. I guess more than anything. So I know this is cluttery here. There's kind of some spaghetti mess, but let's kind of dig into this a little bit. So we got the pi cycle top. It flagged right here. Um, that actually called the top perfectly, at least for the first peak, not the second peak. The second peak, the pi cycle top was out of play at that point. It wasn't a factor any longer, so you couldn't really rely on it. If we go back though, actually here I've got a better chart. If we go back real quick, let me just sidetrack real quick. If we go back and look at this chart, this is like Bitcoin's entire history. It's just got more history on this chart. If we go back and look at this, wrong one, this one, we can see that it topped out twice. We actually have two crossovers for the pi cycle top. We have an initial cross right
Hmm.
here that it called. Let me change it to the weekly. That'll be easier. Um, So just my point here being, there are scenarios that do exist where it can flag twice in a cycle. It
Yep.
flagged
Yeah.
here on this peak, and then it did, cross over and flag again on the second peak. So it can happen. That's a possibility. But there's also, as we've seen, a possibility that it doesn't happen, like here in this instance. So what other things can we rely on? And that's why I go back to these other couple of indications that I've kind of come into. One just being the 10 and the 20 bar moving average on the weekly time frame, I think will be hugely helpful. Yes, it's not going to call the perfect top like it did here, but it's going to you're going to save 90% of your gains. You're going to
Yeah.
really be okay. If I'd have sold here instead of here, I'd take that all day long, like in a heartbeat. Um, and then if we kind of go over here and look at the second peak, same deal. You're only down. I mean, what have we got here? Let's see. Price from the peak. If I'd have sold at the close, let's just say I'd have sold at the close of this candle, I'd have lost 20%, 28% off the top. That's a lot, given that Bitcoin was pumping from whatever that was 48,000 up to 69,000. So that's a chunk of change you're losing. But again, I'll take that all day over watching this drain out for a whole year. I mean, come on, like no question, And so
Hmm.
that's another thing I'm going to factor. Another thing that really kind of came into play around this time frame for me too, though, was this was according to Bob Lucas and according to like the idea of following Bitcoin on a 4-year cyclical pattern. This was right very much in the timing band for the peak of the bull cycle. This was exactly the same month. Like if we go back to this chart here, um, this was 35, this peaked, this was the 2017 peak, and then you come back here, this was exactly 35 months later. This was exactly when it should have peaked again, and it did peak again. And so that was really confusing
Yeah.
me in that moment because I'm like, well, something's not making sense here because we're right here. We should be at the peak right now. And yes, we are at the peak, but we're only at $70,000. And everybody in Twitter and everyone was shouting from the rooftops, it's going to go to 130, 150, 200, 300. And I'm like, why are we only at
Yeah.
70,000
Yeah.
bucks? But it was confusing too because we had this big, two big, really nice, clean 60-day cycles, right translated 60-day cycles that were like, hey, we're in an uptrend, we're booming, we're moving, And so I'm like, we're definitely in an uptrend. We've been in an uptrend since July, and you know, we should keep going, but yet we should be at the end of the cycle, but we should keep going, but we should be at 150, but we're only at 70. And so I just was like all messed up in my head about that. And looking back, I should have clearly the timing was correct. Clearly the timing won out, and the timing was what dictated everything because boom, I mean, that was it. That was the end of the road right there. And so the idea of what you think it should be at or what level Bitcoin value should be at shouldn't factor into your thinking or your decision making process, certainly at the end of the cycle in this timing band like we were, and that was a huge mistake I
Yeah.
made and something that I deeply regret not putting more weight into. in my thinking process. Because if I'd have been like, you know what, this is it. I don't care what level we're at. We're done. This is it's 35 months. Get out. You know, or 35 weeks or what or yeah, months. Yeah. Um,
Yeah, it really can take months to realize that the top is in, you know. Like that peak is at November. A lot of people were saying, well, the peak's going to be at December. Bitcoin can 2x in a month, you know.
yeah.
20 like December 2017 was its top, December 13 was its top. Everyone was like, well, December 21 will be the top. You know, people are talking about, as you say, like 150, 300, like it can go from 70 to 150 in a month. That's a 2x, like it's possible. You also had people out there talking about like, well, maybe the cycle's slightly elongated now because it's like a bigger market. There's more players. There's more money required to move it. There's more adoption, etc. But you know, as you say, it hit that like the 35 on your Lucas indicator, and you could also look at this. I remember Donald at the time saying it, and I didn't want to believe I was coping. He was like, "It's a failed breakout of like the 60K or whatever when it fell back underneath." And yeah, it's really hard to tell at the time when the bottom is in. And quite honestly, like I sold some in December, I sold some in January, I sold some in February. You know, I was selling down my position, but too slowly, right? And then I remember I was in Jamaica on holiday, and that turbo June 3AC, whatever it was, Luna dump happened. Not having the internet and just being like, what is happening? And realizing that I knew the bear market was in, but I was being way too slow in reducing my positions because I was still kind of hoping that maybe it would be a shallower pullback. It's a more established market now. It won't go down as much as the previous cycles. But ironically, in the end, we almost did go down just as much, which probably has something to do with human psychology and something to do with particularly Bitcoin being a fixed supply asset. And so it doesn't have like the same ability to sort of like change supply based on demand. And so like it as much as it goes up with volatility, it also goes down with volatility.
Right. Yes. Yes. Um, Oh, yes. Sorry. Okay. So one more thing here. One more indicator this is a newer indicator that I started using more recently. It basically, it identifies divergences, like momentum divergences in price action. And so this flagged a couple times at key points on different time frames. It did actually call the top here. Um, which would have given me pause back then, I think too. I didn't have this indicator until recently, but this is something I'll be looking at. But I think on the monthly it called both tops also, um, which was noteworthy for me. So um, and it obviously didn't flag anywhere else in any of this other stuff. So this is another thing that I'll be using to sort of just, you know, add additional context and confluence to my thought processes because I think it's doing a good job at identifying some of these more macro tops on these time frames. So yeah, between between the pi cycle top, between these two moving averages, I think I've got a pretty good foundation for when to get out. Um, I wanted to kind of touch back on M Cubed had a question in the chat regarding when to ditch Bitcoin and ETH and when not to be married to it, and that's would have been in these times. Like I said, the first time Bitcoin crossed down and closed a weekly candle below the 10-day, I should have dumped everything. And then again here, and it's funny because I remember my thought process in the moment with these, particularly, well, with both of these, I was super diversified usually at the peaks of these bull runs. Like you start out thinking, okay, I'm only going to hold four things. I'm going to hold Bitcoin and ETH and like maybe one or two other things, and then I'm just going to not be stupid, right? By this point, I would look at my Delta tracker app. I would have like 25 different bags of just crap in there, And I'm like, what am I
Yeah,
even doing?
yeah,
And
yeah.
half of it was staked in random platforms on random blockchains. And I'm like, well, I don't want to mess with all this. Like, yeah, it crossed over on the weekly, but shit, man, that's going to take me 3 hours to go through and unstake all this stuff and undo all. And some of these I bought at really good prices, and like, I don't want to just nah. I, no, I'm not going to do that. I just can't be asked to do that. And like, I so regret not doing that now. I so regret not just saying, you know what, take a couple hours, unstake all your stuff, dump it to cash, and just shut up about it. Because like I, I flushed tens of thousands of dollars down the toilet by just, I don't feel like doing that. It's too much of a hassle. And
It's really hard at the end of a bull run when, particularly if you're on Twitter and we're all on Twitter and you're on crypto Twitter and you're seeing like supposedly people left, right, and center making it, like someone suddenly got like 8 figures, 9 figures, whatever it is. You feel like you haven't made it yet and it's getting late in the bull run, but you think, look, if I just diversify, into some smaller cap things, like maybe I'll catch one or two of them, and I might get to the point where I feel by my number in my head that I will have made it. There's still time I can do it. But usually, when you are getting to that point, that's like a pretty good indicator within yourself that actually you should be selling down positions, not like building them. I've got that experience as well. Like these, like towards the end of 2021 is when I start buying things like Pussy and Ass, because I'm like, that's a stupid name. Like, surely that's going to become a meme and someone's going to pump that. But of course, a year later, I'm selling them 95% down for like capital losses on the tax return.
right.
I think there's a few things here. Like one, basically everything in crypto is a scam. Like if you approach it from that perspective, it's probably actually a much healthier and much more financially successful way to approach things than to be the opposite, which is marrying all your bags thinking it's the future of France and this is all the tech that's going to change the world. In 2020, if you looked and you really thought like, who are these for that it requires like MetaMask and staking, and you're really just staking to stake something else, and then you're going in every day to click a button to get to realize the stake stuff that you could get so you could stake more of it. Like it's all crap. In 10 years, there's going to be some fundamental technologies and everything built on this, and Bitcoin's going to have value, Ethereum's going to have value. Most of these alts are not going to have value in at least with regards to versus Bitcoin and ETH. Anything you're buying that isn't those two, you're probably someone's exit liquidity, whether it's like a Telegram group, it's a VC, creator of the project, it's like a whale, it's a podcaster. Like you really do need to be very skeptical. To your point about buying everything, one of my new rules for this cycle is Bitcoin and ETH are fine, and then I'm allowed a maximum of 10 alts. If I want an 11th alt, that's fine, but I have to sell one of the other 10. That's partly so I can keep track, right? Partly so I can keep track, partly so I don't fall into that, well, I'm not going to bother doing it because I've got 30 alts, and for me to like sell all of these things and unstake them all, it's going to take 5 days, so I won't do it. Oh, they're down another 50%, whoops. And it's also a forcer to like only go into your highest conviction plays.
Right.
I think people, if they approached and said, look, we're still fairly early on in what is probably a bull run, I'm going to be 30% Bitcoin, 40% ETH, and then the remaining 30% I'm going to spread across 5 alts, and I'm going to buy 5 alts from 5 different themes, and I'm going to buy like the theme winner. So for example, I'm going to buy LDO because I believe staking will be something. I'm going to buy Arbitrum because I believe L2s are going to be a thing. I'm going to buy Sol because I believe like it's a differentiated enough L1 and there's probably going to be room for more than one L1 smart contract chain, but I'm just going to sit on these for the majority of the cycle. And when I see the pi indicator go, that's my Bitcoin gone. When I see like the 10 or 20 week moving averages hit for these individual alts, they're gone. You'd probably do better than 98% of people trying to like invest and trade in this market than if you were suddenly in like 30 different alts and you were wasting time staking and losing things. And simple is better, and having a few key indicators which are just like absolute all right, I'm not allowed to do anything but sell or buy in these situations. Indicators are really good, and those indicators don't have to just be on a chart, right? a great indicator for buying would be particularly in when you get a good sense for the end of the bull run is when you've got the biggest names in crypto like rage quitting. Like if you think about when FTX and Luna blew up, and you had people like Covey, who was like one of the biggest people in the space, being like, I think I'm just going to get out of crypto entirely.
Yeah.
That's such a great negative sentiment point. Like I remember hearing that at the time, thinking like, okay, I need to now start buying back in. Of course, as I said earlier on in our conversation, I'm always too slow. So I was buying little bits. And then we had the January pump, and so I was too slow accumulating. But there are plenty of different indicators out there. Everyone's got their own indicator, right? Like if you find yourself suddenly dreaming that in a month's time your portfolio has doubled, you should probably sell 20%. If you suddenly like looking online at like houses that are like $5 million, you should probably sell 20%. If you're thinking
Guilty.
like, oh man, maybe I should quit my job and go full-time crypto, you should probably sell everything. Because those euphoria signals within yourself are probably pretty great counter indicators that tell you actually like you need to sell down. And I was actually looking yesterday, I saw a tweet from someone and it was like their euphoria indicators. And this was specifically, I think, because they were a trader, but they had this list. It was like, if I do any of these things, I must immediately sell to like zero my position. And it was like, if I clap out my hand, if I like yell fuck yeah out loud, if I start thinking about women, it's like all like any of these things happen, I must sell 100% of this trade. You know, it's a bit different if you're a short-term trader versus a long-term investor, but it's really important to also understand not just chart indicators, but your own personal indicators. There are certain things that you probably did in the last bull run that the next time you see yourself doing those, that's a time to at least have like, if I do this, I must sell
Right.
X% of whatever position I'm in, you know?
Right.
Yeah.
So you had shared a thread
Personal regrets, right?
You had shared a thread in the Discord about a really great thread, a Twitter thread about just, you know, all different about the rotations of crypto and, you know, throughout and all that. One of the really excellent takeaways from that is it pointed out in one of those slides to make a habit of whenever you have an alt that just pumps crazy, to take those profits and rotate them back into Bitcoin. Because usually what's going to end up happening is that alt's going to blow up and then it's going to retrace all of its gains. And if you can be pulling those profits out and rolling them back into Bitcoin, you're going to retain so much more of that than if you just watch it bleed out.
Pull up that Uniswap versus ETH chart for me, and let's talk about that a bit. So, yeah, I'm pretty confident that this cycle is going to play out the same as the last few cycles. But basically, what tends to happen is Bitcoin leads. You know, we saw that in 2020. If you looked at ETH or any alt against Bitcoin, they all bled. So Bitcoin usually leads, then ETH overtakes. Like Bitcoin starts to top out, and ETH overtakes, and it can often be pretty short. So in early 2021, it was actually very short, the timing between like ETH leading and then alts overtaking it. But typically you get Bitcoin leading first because money is coming back into the space. It's the lowest risk one. It's the most known one. So it pumps first. Then people start making profits on it. New people start realizing that the bull market is happening. They look for things that haven't pumped as much yet. So they get into ETH. That's the next best one. Then ETH starts pumping, and then people go even more out on risk curve and alts start pumping. This is why I think it's very good to have a portfolio of like, you know, 30% Bitcoin, 30%, 40% ETH, and then like 30% alts, and you want those alts spread across different themes. Because what happens when you start to have the different sectors of the alt market pump is they pump out of sync with each other, like one type of, like DeFi pump before NFTs, right? So you'll have different sectors of alts pump at different times, but you don't know in which order they're going to pump. And the last thing you want to be doing is like FOMOing into each sector's pump, because you're going to miss the majority of the gains. You're going to get in too late. You're going to hold too long, and you're actually going to lose money on all that stuff. Right. So instead, I think people should do, and what I am doing this cycle is, you want to hold, let's say 5 to 10 alts across as many different sectors as you can, because what's going to happen is different sectors will pump, idiosyncratically. And if we look at like Uniswap versus ETH or Bitcoin here, you'll see typically what alts do is they have one very fast pump against Bitcoin and ETH. You can see that at the start of 2021. And it's almost impossible to catch the majority of those gains unless you're already positioned before it happens. And if you FOMO in, you end up holding too late, and then you just watch them bleed the rest of like the bull run against Bitcoin and ETH. And then even worse, they continue to bleed against both of them through the bear as well. At best, you might see a few alts do like a double top against Bitcoin and ETH. But basically what you want to do is if you have an alt that starts pumping against, for me, it's Ethereum now, because like alts and ETH are far closer to me than like Bitcoin. And for me, it's like separated. It's got like different narratives around store of value and all the rest of it. So like I tend to measure the alts against ETH now. Mm-hmm. But if you've caught one that's doing a pump, you should be looking at it against ETH. Every time it has a pause on its way up, you should sell a portion. And then, you know, for example, using that green indicator, the 10 or 20 week, whatever it is, once it goes under that on ETH, like that is it, you sell out of that alt and you probably never buy it again. You'd probably be really better off removing it from your trading view so that you can't look at it. That alt has now had its pump for this cycle. It's not going to be the one that you want to to hold again for the rest of the bull market. And probably what you want to be doing, as an example, it'll be different for everyone, but for me, let's say, as I sell out of this alt, the profits from that, 30% get put in dollars for taxes, 30% gets put into ETH for the rest of the cycle, and 30% of it goes into either a new alt that hasn't had yet its sector pump yet, or it goes into ETH while I look for that new narrative to buy into, right? You don't want to overhold these things. They will bleed against ETH, they will bleed into the bear market, and probably never see their tops again against Bitcoin or ETH ever again. And you don't want to round trip them. And you do want to take some money to cash for taxes, because I remember in 2018 and in 2022 hearing about people that didn't put money aside for taxes and were like hundreds of thousands or millions of dollars in taxes owed, like they were broke. Like they had no money, they were going to be basically paying their government tax for the next 10 years. Like they were never going to be solvent ever again.
Totally.
So you do want to be taking profits, and you want to realize that when these things pump, they probably only pump against ETH for maybe a month, and that's it. Then it's done. Like that, you don't want to be holding them after that point.
Yeah, those are absolutely great points, and you can see it plain as day on the chart here too. I mean, and the same thing I was talking about selling out at the 20-week, 10 or 20-week moving average applies to dumping your alts against ETH or Bitcoin. Totally, and I've kind of hit on this a number of times. I don't think we've talked about it yet today, but like you should always, especially in this phase of the cycle, especially in a bull run, an accumulation phase in a bull run, always be looking at alt Bitcoin charts or alt ETH charts. Don't look at the USD charts, because that completely skews your perspective on how well or how not well you're actually doing. So like real quick, like if you go through my entire trading view here, like every one of my charts, I've got a USD chart and a Bitcoin chart of the same alt for all of them across the board. And I'm always paying attention to how it's doing against Bitcoin or ETH, and not against how it's doing against USD, because that's all that matters. But yeah, that's a fantastic point, and totally, you're right. You can see it here. It peaks once. It only ever peaked the one time way back in the initial pump at the beginning of 21, and then that was it. And it was over from there on out. So, and you could probably pull up any alt chart out there.
Uniswap.
Yeah.
Yeah. Sorry, I cut you off. I was just going to say, remember, like this is like basically like the number one DeFi blue chip out there. And it still only did one pump against Bitcoin and ETH and then bled forever, right? And I use ETH more than the Bitcoin more now these days for a couple of reasons. One, because I think overall the amount that ETH can continue to go up just in terms of multiples is higher than Bitcoin. Two, I think they're sort of closer in terms of the sort of people that are buying ETH and buying alts, like a more similar person that might be buying Bitcoin. And I think the risk profiles are closer. Although as ETH matures, its risk profile goes down. But like some people sometimes ask, like, why would you care about it against the ETH pair, for example? And the point is, like, you don't want to take on, like, you need a benchmark for what you want to take risk on, and any alt is going to be far more risky than ETH. And so
Right.
you only want to hold something that's riskier if you are getting a commensurately greater return on it. And so as soon as you're not getting that return, like, you don't want to be holding it. Like, you're better off having a lower risk profile and doing just as well or better with ETH than holding it off.
Totally.
Another
Totally.
one, just pull up Pepe for a second, because it's a recent one. We can talk about this for a little
Do
bit.
I
Like,
still
pull
have
up Pepe
it?
on the daily against USD.
Oh, I might have killed it. I might have killed it. Let me see. I had, it's funny, I had a Pepe tab for forever. Hold on. Do I still oh, here we go.
Just because it's like it's a recent one, right? Like,
Yeah.
people could do worse than this sort of strategy. So like when it comes up, look at it on the daily, and sometimes these alts, they pump so fast it's literally over in days. But go back to its initial pump. Yeah, all right, on the daily, and then
Oops.
let's
Thank
say you're lucky enough. Let's say you're lucky enough to like hold something like this. You got in early. For me, this was like a GM coin last end of last year. This was the one where I was like screaming "fuck yeah" to the clouds and was like up 20, 30x or something at one point. Imagining houses full of women and fancy cars. Which then, I did sell some out at a pretty high multiple, but then obviously like didn't appreciate how quickly it would come down again the other side, and so like missed out on a lot of those gains. But like often what you'll see these things do is they'll have breaks. Like you see that after the first initial pump, there's like a pause for like a couple of days, maybe even a week there. It's sort of very towards the left of the chart,
Yeah.
kind of almost where the price is today. Like no, down further,
Oh,
down
okay.
further.
Yeah. Yeah. Yeah.
The first, that one there. If you ever find yourself in an alt that's going parabolic, and you see one of these consolidations, like you could have a worse strategy than saying like every time I see one of those, I sell 50% of my position, right?
Right.
There are better strategies than that, but like if you at least have a policy of like, if I hold something and it goes vertical, but it has one of these multi-day consolidations, that's the signal that I sell 50%. You're probably going to do far better than someone that ends up like bag holding way too long.
Totally. Totally.
And there are better indicators that you can sort of like to do those sort of like, okay, it's time to get out. And you can even have like your own rules, which is like, oh, if it does a 10x, I have to sell 20%. If it does another 10x, I have to sell, like if it goes to 20x, I have to sell another 10%. Like there are different rules that you can come up with. The key is to really just like obey those rules, because in the moment, like the visions of grandeur and making it really cloud your judgment. It's very hard to pull the trigger to sell unless you have like very strong rules in place.
Totally. Totally. I wanted to circle back on a couple of things real quick, and then there's a couple of questions in the chat that we can answer too. So, two other things I wanted to point out, two other mistakes that I made. Or wait, actually, before I do that, there's one chart, and you're not gonna be able to see this, but I'm gonna show it on the screen anyway. So there's this thing. Another way to recognize the peaks, I noticed, is looking at this on-chain analytic called number of active addresses for Bitcoin. And if you'll notice, we'll like go back to 2017 in this first peak, it peaked out here and then dropped off precipitously immediately right after. But then in 2021, it peaked out here in this first peak and then it dropped off and it never really recovered. Like Bitcoin never really recovered its momentum after this first peak. And so the second peak was just kind of not really underpinned by anything solid. And it should have been a real eye opener for me at the time, but it wasn't. And so going forward, I am going to pay a lot of attention to this metric here and this active addresses. And if I see it drop off after a peak, I'm going to know that, there's not a lot going on anymore. And the momentum has drastically shifted. The underlying momentum has drastically shifted. So that's another analytic I wanted to point out. But I'm going to go back to TradingView here. So, couple of mistakes I made was trying to get clever and selling some Bitcoin to buy it back cheaper. And so, and
Hmm.
what I was doing was actually, let me go to the cycles chart here because I was actually using the cycles. I wasn't basing it on nothing, but I I learned the hard way. And so, God, my trading view is really just dragging right now. Um, so one, when we had the COVID crash, I was like, ooh, hey, I had sold some a bit early in the crash, like around here. And then I thought, well, I'll buy back some, I'll try and sell it and buy it back cheaper. Or no, maybe I sold it really too far down here, too low. And I ended up losing some Bitcoin in the end because of course it just kept going up from there. And so I was like, well, that was stupid. I literally just flushed Bitcoin down the toilet by but selling it thinking it would
Hmm.
keep going down and then I'd buy it back cheaper. And so I didn't quite learn my lesson at that point. And so if we fast forward to, we got to around here. And so we had hit this cycle bottom. Let me zoom in on this because this one really killed me. Um, so we got to the cycle bottom. Let me pull up the daily date range right about here. And so we got about 60 days out. And we had a little bit of a lull here. We had a little bit of a dip in the price action, as you can see on the chart. If we look here, it kind of dipped a little bit. And so I thought, all right, I think we're going to keep going down. I think we're in this timing band for a cycle low. And typically, we had 2 or 3 red days in a row. It came back down to the 10-day moving average. So I sold a chunk of Bitcoin here thinking I was going to get cute and get clever and buy it back cheaper and make up my Bitcoin that I lost back at that COVID crash. And so I sold some, and of course it just ripped for like another 2 weeks. And oh man, I was so bummed out when that happened. But you know, I never did that again, really, like on that same scale. I've since done it, but just I'll sell like 10% of my Bitcoin and try and see if I get, see if I time it right. But never, like I think I probably sold most of my Bitcoin in this time frame here, thinking, yeah, man, I'm gonna get clever and I'm gonna get a bunch of free Bitcoin out of this, and just nope. And man, I just kick myself for that to this day. And this cycle right here, I remember every time I look back at that 78-day peak, knowing that it just kept going. Um, so don't do that
I think
because
one of the best things that you can convince yourself is that you're like, I have to remind myself and tell myself this all the time. Like you're terrible at timing. Like I know I'm terrible at timing. Last year, you're actually better at timing than I am. But like I approach it saying to myself, like I am terrible at timing. So when we talked earlier about like selling out of things like Bitcoin and ETH, the only time that I would do that is if I think we're at the end of a bull run, like end of a 4-year cycle. I think it's going to be down only for at least a year, and I think it's going to be down at least 60% a year from now. Like the only reason I would sell is for that. I would never sell so like mid um, mid cycle, and I certainly wouldn't sell with the idea that I would be buying back in within like weeks or even a couple of months because I'm just not that good at timing. All of my best returns have ever been through multi-year holds, and that's even before you account for the fact that I would have to pay taxes on sales. I will say my best ever trade was that COVID crash because in the weeks leading up to that, I was buying Bitcoin put options. And I remember being, I think it was like awake at 4 a.m. onwards, just listening to my phone ding, ding, ding as my Bitcoin stack doubled in like
wow.
24 hours from all of these put options just going haywire and being like up 10x. And I was just like selling, 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 I'm selling, I'm selling. So that was why my 2020 was so good. It was like I doubled my stack. I did continue to buy put options for months, and so like whittles my stack down a little bit. But I was basically that whole year 90% Bitcoin only. So my 2020, like it was hard for me to play that year better. My 2021 felt incredibly frustrating because I came into that year 90% Bitcoin, thinking the bull run was still going, partly thinking from my PTSD that alts and everything else were scams, partly not wanting to have to suffer like 30-40% taxes to like move from Bitcoin into alts. And I just sort of watched my net worth not really grow that much over 2021, where other people were 10xing. That was super painful for me. And so that's one of the reasons why, this cycle, I'm going in with a far more diversified portfolio. To be honest, right now I am still like 80% Bitcoin, but that's because like we're at the start of the bull run still.
Right.
I think the one catalyst to the upside that we could have in the coming weeks or months would be like the Bitcoin spot ETF. August and September are the worst months for crypto. And so if things do bleed, Bitcoin will bleed the least. But I am at this point really looking to like get from that like 80% to down to more like 40% Bitcoin and then 30% ETH and 30% alts, because like I want to be ready for that transition and I don't want to be like chasing it, because one, it's so hard to get in once you've missed and it's like something's pumping. It's so hard to enter at that point. And two, I just don't want to have the regret that I had in 2021, which was like I was too all in on one asset, and the regret of like, quote unquote missing all of the other things is just too painful. Like psychologically, it makes you make bad decisions. It hurts. Like the max pain of feeling like everyone else is getting richer and you're not, even after like a great 2020 like I had, is really painful, which is why I do think you want to be diversified across Bitcoin, ETH, and a number of like key themes, like at least probably 5 themes that you think are going to be coming in this bull run. Because at least then you'll feel like you caught a bunch of things versus like missing. And you don't want to end the cycle being like, man, I missed everything again. Like that's super painful.
Yeah, I think you and I are on the same page there. I'm taking a very similar approach with that. I'm still in Bitcoin now. I'm overweight in Bitcoin primarily just because it has such a strong narrative with the ETFs, and nothing else really does at the moment. ETH has its own thing, but I don't think that's going to quite take off yet. And really, Bitcoin is sort of the thing at the moment.
But it's to prove this point, pull up Bitcoin, ETH, and look at the end of 2020 on the daily. And this is like a generous one. Like if you're an alt, like you could even look at like Sol BTC. I see Sol BTC. Look at that one. It's even better. So do Sol BTC.
Sol BTC.
And then look at like the last few months of like September through December of 2020. Right. Like this is the damage that you can get caused if you're in alt too early. Like that's a 70% or so bleed against Bitcoin in like 3 months, because it was Bitcoin season, and people that were in alts only like got wrecked against Bitcoin. So you do want to be overweight Bitcoin early in the cycle, but you've got to be very fast to move when you see the rotation happening, because it happens very quickly. And I think like the Sol BTC chart is like a great example of that. You can also see in that one, like there's a few times when it sort of like flattens out, and those probably would have been great profit taking points.
Right.
But even if you're just using something like the I think that red line is what your 20-week moving average. Like that's another example. Like if you were just selling every time it tapped that, you'd get the majority of the gains right there. So.
Yeah, one thing I want to point out here, this is interesting. So going back to this, was it this chart? No, this chart. We see this massive rip here in Bitcoin, and you think, oh God, this was the place to be, and what did Bitcoin do? So let's just say from here to here, from this to this first peak, 5x, give or take 5x. In this same period, Solana did a 2,600%, 26x basically gain against Bitcoin in that same time span, in that same run.
Wait. No. You're not looking at the same time period there.
No?
You were looking at the end of 2020, and that's the start of 2021. Go back.
Let's see. Let me go back. What did I do here? Well, okay. So it was maybe to.
So, right. Yeah.
Okay.
Exactly.
But even still, okay. So
like if you look at the difference. Sorry, there's 2 separate phases of this. Like there's the September to December phase,
right, where
Bitcoin
down,
destroys everything. Yeah.
Right
and
here.
And then there's the January to, So that's the thing is you can't. These rotations are worth doing, but you've got to be very quick to act when you see the change go, right?
Right. Right.
because you don't want to stay in Bitcoin too long, because then, to your point, yeah, you get like these insane pumps against Bitcoin.
Right. Okay, so we got a couple of questions in the chat, and then we can probably look to wrap it up. We can go on here a bit. Is there anything else? Yeah, no. Okay, so one question. How do we reconcile Raoul's idea of like the debt refi cycles and the business cycles with the, you know, the Bitcoin 4-year cycle idea that we're looking at here? Because, you know, Raoul talks about how it's about liquidity and the refi cycle and nothing to do with the halving cycles. Um, I, I agree with that. I actually don't think the halving, well, the halving, to me, the halving isn't the catalyst. To me, what the halving does, the halving was round about here, I want to say. I think it was actually right about here in April or May of 2020, the last halving.
Yeah,
Um,
yeah,
to me, the halving is more of like an amplifier. Like it's Bitcoin would have gone up anyway based on the debt cycle or the liquidity cycle and the refi cycle and all that. Bitcoin would have gone up anyway. But because of the supply shock that comes from the halving, it sort of just amplifies everything. It just makes it go up that much more than it would have anyway. Is really my take on the where the halving comes into play. But I do agree that it is much more to do with the liquidity cycle and the business cycle and that sort of thing. I am in line with Raoul in that sense. But the halving just kind of, you know, like I said, it's like a turbo boost for everything, at least in terms of Bitcoin anyway. What's your take on
yeah.
that?
And these days, yeah, these days the boost is more from a narrative perspective than like a supply decrease perspective, like a rate of new supply decrease. But I mean, I just really think about it in the context of like, you know, 3.5 years, 4 years. In general, you know, these cycles tend to end at the end of every 4 years, right? Like around November, December
Right.
each year. So I will just be using that as one data point to basically say, unless I see something that tells me massively otherwise, I'm going to assume that the end of this cycle is December 2025. And
Right.
if I see things like the pi indicator happen before that, that'll like affect my decision making. But in general, because I make most of my returns, I think most people would be the same through like multi-month, multi-year holding. It's just good to know. And it's, you know, where do you place the line in the sand for like a 3.5 years cycle? Like it's easier for me to think of the 4-year cycle and think of that being at the end of 2017, the end of 2021, the end of 2025, than like some other, you know, date. So yeah, I think it is largely to do with liquidity now, but it's an easy and well-known narrative to just think it's every 4 years for crypto and it's at the end of each fourth year. So the end
Right.
of 2025.
Right. Right.
You know, that's how I use it.
Right. And then this last question, and I think this is going to be a good question to end on. So it's basically looking forward to this coming bull run. What themes will we look at to find the fastest horse? I'll let you go first.
Yeah, let me just pull up my little list here. Let's see. So obviously, you know, Bitcoin and ETH are going to always be in your bags. I do think alt layer ones was a really big meme last cycle. I think layer twos will be a big one this cycle. I think we all kind of know that. My plays there will just be, you know, and until we get like ZK L2s, like I'll have some optimism in Arbitrum. I think it's worth having some Sol just from the perspective of as a differentiated enough layer one that I will have
Yeah.
a bit of that. The chart looks nice. I think there's still enough narrative around it. You know, DeFi, you look at things that do well in the bear market for indicators. So like DeFi perps have performed relatively well compared to alts. So, you know, I'm going to have a small percentage of my portfolio on those. LSDs, this, like the staking derivatives like Lido, I think are going to be like a really big narrative. I'm sure we're going to have, you know, more and more sort of like normie realization of the thing that Raoul and other people talk about, which is like, you know, if ETH is the quote unquote risk-free asset in crypto and it has like an interest rate attached to it, more people are going to want to do that. I think, you know, it's hard to imagine that AI won't be one, given how strong a narrative it is in traditional stocks. This is a classic example of, like, honestly, like, this is one of those areas which I will likely buy into, and I know you already have like some allocation
Right.
to it, but it's also one of those ones that I'm absolutely not marrying my bag on it. I suspect there's a good chance that it's vaporware at the end of the cycle.
Right.
But I think it'll have a really strong narrative around it. I do think that sometimes when you look at stuff that just completely failed in the previous cycle, could be really interesting. So gaming sucked in last cycle. That was just a disaster.
Right.
Other than Axie, if you were lucky enough to get into that, I have no idea really at this point, like, how to play that narrative. Like, what's great is when you find assets that have like a confluence of narratives, right? So like layer ones can be really good. Like ETH, you've got like, it's a layer one. You've got people like you've got smart contracts. You've got like people wanting to stake it. You've got it benefiting from everything from like DeFi to NFTs to blah, 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 blah. So when you have a confluence of narratives around a single thing, that can be really good. So honestly, probably some of the best plays around like gaming is probably going to be things like rather than like a specific games token, you might be better off like even just being like, look, I'm just going to play ETH as my gaming narrative. Immutable X is one that I'm going to hold. Like, it's basically an L2, like they're trying to like cater more towards their gaming. And so I like the idea of maybe some assets like Immutable or maybe even Engine as ones that are like trying to be a platform for games versus specific games, in the same way that I'm just like no good at picking individual NFTs. I own a Squiggle because I figure that's like the easiest, like most obvious like play to have. But like I'm never going to buy PFPs because I just like I'm not going to spend my entire life trying to work out like which are the plays. I think it's the same with individual games. So gaming, I think, could be a lot bigger, but I suspect the best way to probably realize that thesis is going to be by owning an L2 that is like focused on like getting more sort of like games on top of its platform. I feel kind of the same with Metaverse. Like, I don't know, like, I think that'll be another one that'll have more adoption this cycle, but I haven't seen, and this is a key point to remember, like sometimes even at this point early on in the bull run, like the tokens to sort of like to bet on these theses don't exist yet. So like gaming and Metaverse, the tokens that could do really well this cycle, they might not even exist yet. So like I don't really know how to play that. You could play something like Sand, thinking like, oh, it did really well for Metaverse last cycle, but then it's a last cycle asset, right? And
Right.
it's really just bled against ETH forever. And is it going to have a new all-time high against ETH? Is it going to do better than ETH or some new token? I really don't know. So with gaming and NFTs and Metaverse, like I just haven't seen it yet. So I would like sort of like play the L1s and L2s for now for those. The only thing I would say, like, people should probably just not even bother at all with is things like memes. Like,
Oh yeah.
it's almost impossible to catch memes. They explode so fast. You are absolutely people's eggs liquidity. If you want to succeed from a meme, you should probably just make one. I've just never made one because I just feel like there's definitely something that's illegal in my jurisdiction from doing that. But like, you never want to be chasing a meme. Like I've chased maybe 30 memes and made money from one. And you have to remember, not only do you have to get in before the pump, you've also got to sell the top because they dump again so quickly. So identifying is hard, getting in before the pump is hard, getting out before the dump is hard. To get all three of those things right is almost impossible. So I would say like certain areas that are not worth like even wasting any brain cycles on are things like memes. In general, you shouldn't be thinking about existing tokens from last cycle as well. A few of them will do well. There's a few like little punts I'm going to do with things like Phantom. But in general, you want to be looking at the new assets and you want to be looking at like some of those themes that I just mentioned. And they might seem like they're not the furthest out on the risk curve and they might not maximize your GMI potential. But equally, it's better to, go for the 10x and get it than go for the 100x and not even get to 5x.
Right.
At some point you've got to do like a risk return sort of like assessment.
Right. Totally. I'm Yeah, I'm about 80% right in line with all of that. I think that that's pretty spot on. I'm looking at much of the same stuff. I do think, like you said, perp dexes to a degree, and that one you pointed out the other day, in particular, I think Lido is
Mux,
a
yeah.
player. Yeah, I think Lido's a player. I think Solana reluctantly is a player. Generally, the layer twos. Although I struggle, the one thing I struggle with the layer twos, particularly like Arbitrum and Optimism, is they're just governance tokens, and I can't quite find the value proposition there yet. And I know that they're still going to have a big speculative
Yes.
pump, but I don't know that that's something that's sustainable. Granted, people are going to do it anyway.
Just on that point, yeah. Before you tell us about
Yeah,
the other sectors you're interested in, yes, governance tokens, they give you nothing. They give you the rights to nothing. They're basically a scam.
right.
You know, they're really not valuable in any way. But one of the things to remember is you should never be buying the assets that you want to own, that you think are great. You want to be buying the assets that other people are either already thinking are great, or you think other people in the future are going to think are great. So, we saw last cycle with things like Uniswap, like there's plenty of governance tokens that like, pump
Right.
10, 20, 30x, even though they don't give the holder any right to anything, basically. So yes, I agree. Like OP and ARP are both governance tokens. There's always the talk that they could change that in the future. Will they? I don't know. But I also think that L2s are going to be one of the things other people are going to want to hold the most. And what are the best ways today to sort of represent that thesis? It would be those two tokens. So even though I think that a governance token gives me nothing, it's what I believe other people are going to want to own. And so I really try to focus now, like, what are the things that other people are going to think are the smart buys versus like, do I think it's a smart buy? I didn't think NFTs were a smart buy for me because I thought the art looked stupid. But what the question I should have been asking myself was, are other people going to think that NFTs are great? Like I should have thought people love collecting, whatever it is, baseball cards, fucking Pog
Right.
things, I should have been thinking, do I think it's a smart thing? I should have been thinking like, is a significant group of people, the majority maybe even going to think that this is a smart thing to buy? So
Right. I think to kind of summarize that notion, a good way to look at it is follow the buzz. Follow the meme, and not the meme coin, but the meme, in that the thing that everyone is talking about, the thing that crypto Twitter won't shut up about. The individual projects or the
yeah,
sectors that are just on everybody's radar, all the time. Those are the things that's following kind of the hot ball of money around. That's where you're going to do well in terms of like picking the best theme, I guess, to invest in. And it doesn't, like you said, it doesn't matter if you think it's a good project or if you think it's going to be the thing or not. It's what has the most buzz is what does the best. And we've seen that time and time again in this space over the years. And really, that's kind of the bottom line. It's like, yes, we can list out a bunch of individual projects, but all of these really come down to, these are what everyone else is talking about, AI and layer twos and perp dexes and whatever NFTs. I mean, this is what's in the conversation, and so that's why we're even talking about it in the first place. Um, and so that's
it makes
kind
it
of
easier to not marry your bags, right?
right,
When like,
right,
if you're like, this is a governance token, it gives me nothing. It
right,
makes it a lot easier at the end of the hype cycle and the pump cycle to be like, well, I'm selling this thing now because like it's not even like a stock which gives me the right to any future dividends from this company. It's like it gives me nothing. So like, why would I hold this thing beyond the point that I think the sort of like the mania pump has like finished? Like there's no reason. So it actually can help when you when you secretly think to yourself, maybe you don't tell other people, but like you're like, this thing isn't actually worth anything. So when the time comes, like I'm going to be fine selling it because like I'm selling something that's basically worthless.
yeah. Yeah, exactly, exactly. I think the worst thing you can do is get attached to something and think this is going to be the future. In 5 years from now, a billion people are going to be using this, and I'm going to be the richest, smartest person in the world. Like, no, you're not.
Yeah,
Or you have like a
yeah.
1% chance
We're
of that
we're
happening.
holding our
You
bags
know,
from 2017, still thinking that, right?
exactly, exactly, exactly. All right, well, perfect, perfect. I think that's a good note to end on. I think this was a really fun conversation, and hopefully the viewers got a lot out of this. Yeah, some good lessons to be learned here, and things to reflect back on. So, thanks so much for coming on. I think this was great, and we'll have to do this again sometime.
Yeah, absolutely. It was fun.
All
We'll
right,
do it
thanks
soon.
everybody. Thanks everybody. I see you on Friday. Here we go.